What's going on? Chris here, and we're taking a look at at Monday, and it looks like, according to the range that I drew in, it went ahead and went to the downside fake out first, and it looks like it's going to attempt to reclaim the daily, weekly, and monthly open. And that's really exciting if it does, is because it would open the door for this other side of the range, and it would be what this is. It's a fake out where it would reverse. And if we go down here, my fake out fibs, it obviously faked out to the downside here. We'll see if we get a fake out to the upside and we close a day or the week above here. That's the question. Can we close the week above here and then move all the way up here? So this is the first target. It's right here. Can we close the week above, or at least Wednesday above here? And then if yes, then target here by Friday. But that's pretty much it as far as if we were to go from the technical side bottom up. These are the moving averages. They're all of them are crossing down, so we're gonna see a lot of downward momentum over the long term. It looks like, because these moving averages are like a momentum, but that's the moving averages. And then we look at the range wise. We were to look at the noise, which is the 2-year and the 52-week range. We gotta find the noise. There it is. Go on the S&P 500. So on the 2-year, it looks like we closed the month below the 0.246 line, and it's looking like it's acting as resistance in the near term. And then we came down, and it looks like we touched the trail here, and we can also see the percent yield inversions is really, really low. So right now we're not too concerned about a flash crash or anything like that. And then as far as the noise, we're still noisy on the monthly. The trend's not efficient. It would be interesting to see if we see a reversal right here. That would be another thing I'm curious about, is how far up do we get? Here would be a little bit higher. It would be here. But we're suspecting we come into the fake out 0.13 line. We'll see. And then on the daily, it's really noisy. It hasn't really been definitive as to the direction. And right now, the sentiment is bearish on the daily time frame and the 4-hour. We can see right here the sentiment index. We're basically hitting the red line on the daily. We're really hitting the red line on the 4-hour. And we got the institutional money buying long on the monthly, on the daily, and the 4-hour. So we'll see what happens there. And then we have a bullish divergence happening on the daily. It looks like as long as it keeps on getting closer and closer together, it's more and more likely to be bullish divergence. And then the H4 is looking like it's having a bullish divergence on this accumulation index, which is the green line. So a divergence would be the green line crossing up over the blue line, or the moving average channel. That's what I count as a bullish divergence, is when we have the green line crossing over the moving average channel. So not only does the institutional money confirm a long bias versus a short bias, and then we got the sentiment index, which you want to do counter trend, because that's like, I think, the retail side or just the sentiment. So you want to play the reversal. You want to play long because it's very bearish. And then as far as like what the MACD is saying, it's got a bullish divergence forming. We're about to cross up on the H4 and the daily, and yeah, we're really gonna see what's the truth here. But with this, what's really interesting is this monthly will trend. So the monthly will trend just flipped bearish. So that is in line with our monthly market structure break. So we go here. Oh, wow, it's already pumping. We got the monthly market structure break shown right here. And it's very similar to that monthly ATR. So that's something that I really like with this weekly ATR right here. It's kind of been flipping and flopping. I guess for more of a faster trend, I like the weekly. And then the monthly is a good long-term trend. Both the channel and the will trend. But, and then what I'm really looking for an entry is this H4. Move this up here. This H4 market structure break. So it looks like we're coming up close. And once we break it and we retest it and then resume, that's kind of what I'm looking for as like an entry, a good entry. And I already have an entry at 4207 spot 89, just like a small entries, but it looks like we're getting ready to cross up on the MACD, and it's attempting to have a market structure break on the close of the day. So we'll see, but it's looking good. We'll see what happens. This is where like a lot of patience comes into play, and just knowing just what would be patience. What would be patience is like an H4 market structure break, or I think that's it for me, or H4 MACD cross in my direction. But as you can see, the MACD had a fake out. So like for me, it's more like the daily or the H4 market structure break, whatever comes first. But yeah, the H4 market structure break, you have lesser of a chance of being wrong, and that's kind of what you should be aiming for with this market reversal bot. But as you can see, I mean, I FOMO'd, but you want to do it with the smallest amount of a position as possible on an H1 market structure break, which is what I did. And as if you recall the video before, like I think I was trying to long all week, or I think that's what it was. I was trying to long all week, and yeah, I think so. I'm not sure actually. Yeah, no, I was trying to long all week. I think I remember that correctly. Yeah, I was trying to long all week since Monday last week, and those H1s can get you in trouble. Like, just stay away from the H1 market structure break. It's just too early of a signal. There's just too many fake outs in there. And with the H4, there's less fake outs, as you can see, and you're able to catch a really good profitable swings. So that's kind of what I've learned throughout this whole process. But let's see if there's any other things. So as far as like momentum wise, so things that are interesting will go from like small to big. So this is the H4, and it looks like we're going to have a lot of a huge squeeze. So this is telling us that right now the trend is looking to reverse. That's why, like, when it touches this green line, it says, okay, it's either it's had enough and it's ready to reverse, or it's about to continue squeezing. So we're going to either see a reverse in the trend or a squeeze to the upside. And as you can tell, like, they're really close to each other. So it's just really indicative or telling of a big squeeze coming. And a squeeze is just something like something where price moves really quick. And then also with the H12 and the H4, you see like it's starting to pinch to the upside. It's starting to have a huge squeeze. And the same thing of the H4, H12, and then the weekly. So we might see the weekly start to pinch up. We'll see. And then also the daily. I'm not 100% sure what that's going to look like. Maybe it'll look a little more like this. Now, depending on how the trend looks like. But I already mapped out where I think it's going to hit. I think it's going to hit here, maybe consolidate, move up here. It's going to do maybe a reverse of this, these like 3 or 4 bars. It's going to do like, I guess, a mirror representation to get the other side of the range. So obviously that's all speculation. I'm just really playing off my like bullish divergence of the MACD, the divergence in the Williams accumulation index for inside buyers, the institutional bias, and what else is there? And I think we got bullish divergence pretty much everywhere. So we'll see, and it's looking very promising. So stay tuned. See you in the next video.